Good morning, Rutgers students. This is Chris Young. This is our fourth week of your Business Ethics and Professional Responsibility one-credit course to fulfill your Master's in Business Administration course requirements. Today's lecture is going to be about one, clearly the Code of Professional Conduct by the AICPA, but more broadly, professional responsibility and conflict of interest. And not only did I give you readings, 4 readings, which were very general. I didn't assign to you the AICPA 207-page Code of Conduct, mainly for 2 reasons. One, obviously, I can't expect you to read this in a one-credit course. Number 2, I'm not sure if reading this for the sake of reading it would do you any benefit, because you are going to be studying for this for your CPA exam. But what I thought made more sense and was more important was really trying to understand the main ideas underlying codes of conduct and professional responsibility. So I asked you to read an article by Michael Davis, Professional Responsibility, Just Following the Rules. I asked you to read an article on What is Good Leadership by Joanne Chula. She's one of our RBS faculty. Giving Feedback, The Truthful Consultant by Sue DeWine, and then Ethical Issues for Accountants by Richard DeGeorge. Now, each of these articles have to address a different topic. But what I like about these articles, and where I think they add value to your career, is they talk about, every single one of them, talk about virtues. And we already defined virtues, I'm not sure if it was last week or the week before, by Aristotle as the golden mean or the golden average, right? It's the action or the behavior of an individual that lies between 2 extreme behaviors. Across all of these articles, starting with Michael Davis, Michael's talking about codes. Codes are based upon or are trying to extol virtuous behavior, but many times we choose not to be virtuous, and rather than doing that, we read to the letter of the code, and we're always finding ways not to abide by it. And we'll get into that in a second. So cutting across all of these articles is this common idea of acting virtuously using reason and logic, trying to make right decisions and avoiding wrong decisions based upon the things we've learned already, to avoid using our passions, to have short-term self-interest. And what really comes home from this is that the code of conduct that we have to establish our professional responsibility is really to help us govern our behaviors, and it provides a minimum threshold for ethical behavior. And that minimum threshold is slightly above our legal requirements. So it's not as though codes of conduct are egregious or really changing our behaviors all that much. Many times they're just slightly above what's required by law. So a code of conduct, again, pulling apart from all of these articles, it should be based upon the spirit of the code. Right in which article was it? Michael Davis's article. He explains every way possible, right? I think he comes up with 7 different ways that people focus on the letter of the code, and because they focus on the letter of the code and not the spirit of the code, that they find reason not to abide by the code, or they use the code as a crutch or a way out. And he explains that we need to teach accountants, lawyers, we need to teach them that the code of conduct is not the end result. It's their guidepost, right? It's guidance for us, a guidance of minimum standard. This is the absolute minimum standard. So you don't want to benchmark yourself against the minimum. But it's the minimum standard, and that, quite frankly, if you're acting virtuously, you're going to hold yourself to a higher standard nonetheless. He also explains, and I believe it's DeGeorge that explains, that most times a code is put in place to guard against self-interest or conflicts of interest. But again, he cautions that the code does not solve for every possible or legal problem that may occur. And unfortunately, many times people look at the code and they think that everything in the code should prevent bad things from occurring, and that's not the case. I want to make sure you understand that, because that's clearly not the case. Every day in the accounting profession, we have different moral dilemmas that the AICPS Code of Professional Ethics doesn't even address. And we're going to talk about a couple of those. But the video I give you at the end of today's lecture goes into detail many of these codes, and I think you'll find many of these codes and many examples around possible breaches of these codes. All right, so just Michael Davis, just to finalize what he was saying. In order for professionals to be able to use the code in a fruitful way, they first need to understand the context of the code, why we have it, right? Or why do we have the code? And then also understand that there's possible failures of the code, and that there's issues not discussed in the code. And unfortunate that many times that's not discussed. These items are not discussed. We tend to talk about the code. I think the AICPA is no different than perhaps the law profession or the engineering profession or the physician profession. We tend to think that the code solves for all potential issues or possible failures, and that is not the case. We need to make sure that they understand that you are going to encounter a whole bunch of different other moral dilemmas that are not discussed whatsoever. So if we understand the code and we understand the basic genesis of it, then we might be able to avoid ethical and or legal failures down the road. DeGeorge, in his article, Ethical Issues for Accountants, he explains that there's 3 codes at the AICPA. There's generally accepted accounting principles, general accepted auditing standards, and then there's the Code of Professional Ethics. And at the heart of all of these codes and rules are really 4 things. Gap and gas relates to technical competence, client confidentiality, but more so technical competence. And it ensures that you're meeting certain standards, quality standards, competence standards. You're doing things exactly as they're supposed to be done. But then part of the COPE, the Code of Professional Ethics, that gets a little bit more into client confidentiality and some other main issues. But the driving force behind the COPE, or the Code of Professional Ethics, really relates to independence and the removal of the conflict of interest. And this is what George is trying to suggest, or suggesting in the article, is that we in the accounting profession deal a lot with conflict of interest. They are so pervasive in our business and in our service lines that sometimes we forget that they even exist or that they're even there. We don't even sometimes know that we have conflicts. And if we look at all of the major failures, if you look at Arthur Andersen in the late 90s, early 2000s, and how they were so complicit with self-dealing and self-interested behavior that it brought down the entire firm with Enron and then some other publicly traded companies that they were auditing. So cutting across, we think that the main idea of the AICPA's COPE is really to help us identify conflict of interest or avoid or get around conflict of interest. So what is a conflict of interest? A conflict of interest is a situation in which a person is in a position to derive personal benefit from actions or decisions made in their official capacity. DeYoung explains in his article, he provides some very, very basic examples. But if you think about what accountants do, we get paid to provide a service. We get paid to provide an audit. We get paid to provide tax returns. And unfortunately, sometimes those tax returns or those financial statements that we're preparing, we have to abide by certain standards. And sometimes those standards are in conflict with our clients. And if the client's paying the bill on the one end and we have a standard on the other, sometimes we're inclined or we're incentivized to bend the rules. This is what we're getting at when it comes to conflict of interest. Because the client pays us and we are in a position to derive personal benefit from our actions related to that client, sometimes we will do things that go against the Code of Professional Ethics, GAAP, or GAS. I'm not saying all of us do that. I'm not even saying a few of us would do that. But it's something that we need to identify with. Accountants are put in a challenging place. We're being asked to bend the rules by clients all the time. And sometimes, unfortunately, arguably more than sometimes, if we are not bending the rules or helping the client achieve their goals, which may, by the way, violate law or violate some ethics, that we might lose the client and that the client will go somewhere else to our competitor down the street. And because we know that they'll do that or potentially do that, we give in. Now, I'm not sure if this is a small mom and pop firm, somebody who just services the small players, or if it's the large players, the Price Waterhouses or the Ernst & Youngs of the world. But what we do know is that conflict of interest exists. There were conflict of interest in the Enron case. There were conflict of interest in MCI WorldCom. There's conflict of interest in pretty much every financial and accounting scandal or major legal battle that we've seen in the past 15 to 20 years. Conflict of interest always come up. So the COPE, rather than focusing on the letter of it, we need to now think a little bit more about the spirit of it. And unfortunately, many people forgot that the spirit of the Code of Professional Ethics is to focus on independence and to help remove those conflict of interest. And I know this is real because, as I said to you before, I'm a partner in an accounting firm, and this is a challenge that we deal with. A client will come to us and say, hey, I'm putting these expenses through my corporate tax return, and we find out that they're not allowable expenses. They may get a little aggressive, perhaps, threaten to leave if you don't allow them to put the expenses through. Or maybe there's a journal entry that they're trying to push some revenue out to the following year, so to avoid some taxes in the current year. Or maybe they're earning smoothing a little bit. Maybe they're putting some accruals on the balance sheet that don't necessarily have to be there in good times, and they take those accruals off in bad times. Unfortunately, these conflict of interest are everywhere with us. And as accountants, we need to understand that we need to remove ourselves, or try our best to remove ourselves from these conflict of interest. The rules should abide. And if we're all accountants are working from the same premise, there should be no reason in the world that we don't all agree to these rules and stick to them. Unfortunately, some of us are going to use our bad ethics as a competitive advantage against others. And that's probably a miserable place to be. Another conflict of interest that I think is real important, and this probably more so for regional and national firms and the multinational and global, is when a client uses multiple services. You're no longer servicing a client with an audit or a review or a compilation, maybe some internal bookkeeping, but now you're providing them, advisory services, valuation services, strategy services, you name it. And the larger their client, the more control they tend to have over you, and they want you to bend the rules a little bit. So that's real important to keep in mind as well. Before we get into the AICPA materials, I want to once again revisit a colleague of mine, Dan Ariely. And here's a short little video on TED. That's the first of the two on your screen. And I want you to watch this little video because he highlights a conflict of interest with his doctor that I thought was just brilliant. Everywhere we go, we see conflict of interest. And as accountants, because this is probably one of the major areas where we can get ourselves in trouble, it has to be constantly on our mind. And if you had not had the chance to also watch Ariely's TED Talk on a buggy moral code, I'm going to encourage you to do it now. In the second video, The Buggy Moral Code, Dan Ariely explains using a series of behavioral tests how a code can be effective. And in particular, he uses the 10 Commandments as one code. So I'm going to ask you, pay close attention to that study. But what he finds is that when people have codes of conduct on their mind, here he uses 10 Commandments as the code of conduct, but he's insinuating when they have any type of rules or codes on their mind, and it's constantly there, they're going to engage in more ethical behavior. And when it's removed, people tend to be a little bit more unethical. What he also shows, which I think is pretty interesting as we move to a digital society, is that when cash is not part of a transaction, and we're moving to a cashless society, people's willingness to cheat and deceive goes up. And that the only way that we can combat that, at least as Ariely shows, is through codes. So it should not be, you should definitely consider codes to be something that's real important for our ethical framework of our company and of our industry. But what's also important is just remember that the code is just there as the minimum standard. So the minimum standard should be on your mind at all times. but you should constantly be aware of all the other things and on the lookout for other moral hazards that the code does not address. So I'm going to ask you now to turn off this video, spend the next half hour watching these two. The buggy moral code, as well as the conflict of interest, both of them can be used for your case. I think they both have relevance to your case. If you're trying to support an argument, these might be two videos that you want to source. All right, hopefully you had a chance to watch both of those videos. And if you didn't, I highly encourage you to go back and watch them. So you're on the last leg of our 4-week tour here. And I didn't want to give you the 208-page code to read. I just want, being a former PAMBA student, I know what you guys have been going through, and quite frankly, 208 pages of the code at this part in your career is just not required. But what I did find, and I use this for my own staff at the office, is a very strong video that was made in the fourth quarter of 2017 by Michael Hoffner and Janice Schneider of McConley and Asbury. And they spend about 50 minutes or so unpacking the AICPA's Code of Professional Conduct. It's probably one of the best videos I've seen. I think it can add a tremendous presence to your beginning to understand conflict of interest and what the code of conduct, or the professional code of conduct, says about it. They have multiple examples which I think are really good. They tend to work and reinforce much of the materials. Again, this is content that you can use for your exam. If you get through the 55-minute or the 50-minute lecture, great, appreciate that. You will be seeing the AICPA, obviously, Code of Professional Conduct in your very near future, because it's part of the AICPA exam. But what I'm going to ask you to do now is to copy that URL and drop it into your browser and watch this last of the videos that we're going to see in this class. One that I think is very well done, and a video that I'm hoping, I don't want to say enjoy, it's not enjoyment, but I'm hoping it's a video that can add a lot of value. Okay, hopefully you had a chance to watch the 50-minute lecture. I think it clearly encapsulates the idea of being independent and avoiding conflict of interest. So the takeaway from the Code of Professional Conduct is just that. The main premise is independence. Independence, independence, independence. So if you can remember that, and you can remember that we are going to have conflicts of interest, and we should be on the lookout for them. The guide, or the code, is a guide. They're guideposts. They're not every single thing that we have to be aware of. There's going to be so many different other challenges that come up throughout our day. And the more involved you get, and as the more senior you become in an accounting firm, the more and more of these problems and challenges you're going to see. So it's in your best interest now to start understanding these conflicts of interest. Start thinking about these moral dilemmas and how you would attack them if it was your client and you were a partner. But this is it. This is the end of the class. I provided you about a little over 8 hours of materials, I believe. I tried to give you a little bit of our standard business ethics course, a little bit of professional responsibility, and a little bit of behavioral economist that addresses codes of conduct. So you will see this material again. I will see you all in this coming summer, and I look forward to seeing your faces in class, opposed to me sitting here giving a lecture to a screen. Anyway, remember, tomorrow is your final day for cases. Please send your cases to chris.young@rutgers.edu. I only have 1 day to turn around grades here, so if you can, please make sure you get your exams to me, your cases to me, by midnight, so I can turn around grades for Monday night, first thing Tuesday morning. Thank you very much, and I look to seeing you all this summer.